Good morning, everyone. On behalf of EKI Energy Services Limited, I extend a very warm welcome to all the participants on the fourth quarter and the financial year ending 2024 financial results discussion call. Today on the call, we have with us Mr. Manish Tapkara, Chairman and Managing Director, and we have Mr. Mohit Agrawal, our Chief Financial Officer. I hope everyone had an opportunity to go through the investor deck and the press release that we have updated on the exchanges and on the company website. A short disclaimer before we start. This call will contain some of the forward-looking statements which are completely based upon a belief, opinion and expectations as of today. These statements are not a guarantee of future performance and involve unforeseen risks and uncertainties. Today with that, I would like to hand over the call to Mr. Manish Tapkara for his opening remarks. Over to you, sir.
Thank you very much. Hello, everyone, and cordial welcome to all the participants. We are grateful to have you with us as we discuss EKI Energy Services Limited's performance for the quarter 4 FY24 and the financial year ending 2024. Joining me on this call is our Chief Financial Officer, Mr. Mohit Agrawal. I hope you have had a chance to go through our investor presentation and press release, both of which are available on the stock exchanges as well as our company's website. Amidst the shifting tides of our industry's landscape, we have been navigating through a multifaceted environment marked by challenges and uncertainties. One of the main catalysts behind the downward trend was the challenging microeconomic environment, which led to stagnation in demand in late 2022. In 2023, market conditions continued to deteriorate with a 25% reduction in carbon credit issuance compared to year 2021. There was an increasing trend in demand for current vintages, resulting in substantial credit assets from older vintages losing their valuation and marketability. The situation was exacerbated by unresolved geopolitical conflicts, which were expanding rather than resolved. Regulatory developments also posed, which were expanding rather than challenges to the market with resolve. Hello, can you hear me?
Yes, Maniji, we can hear you.
Okay. There was some network issue. So there was an interesting trend in demand for current vintages, resulting in substantial credit assets from the older vintages losing their valuation and marketability. The situation was exacerbated by unresolved geopolitical conflicts, which were expanding rather than being resolved. Regulatory developments also pose challenges to the market, with evolving rules requiring greater compliance and accountability from market participants. The lack of concrete agreements at COP28, Conference of Parties meeting number 28, particularly regarding the operationalization of Article 6 mechanisms of the Paris Agreement, further complicated the landscape, creating a challenging environment for businesses in a short term. Despite these challenges, various market corrections have been institutionalized within the regulatory framework of the voluntary carbon market. These include, but are not limited to, certifications such as ICVCM and VCMI, which enhance independent market credibility. Additionally, there has been a substantial increase in corporate and business commitments to ambitious carbon neutrality and net zero pledges. Furthermore, international carbon taxation on trade and the evolution of credible sectoral decarbonization mechanisms are contributing factors. Moreover, more countries and regions are launching their emission trading schemes, that is ETS, aimed at pricing greenhouse gas emissions at the national level, thereby driving investments in low carbon technologies and supporting efforts to meet climate targets. This growth trend aligns with EKI's commitment to environmental stewardship and underscores the potential for future expansion. While buyers may currently exercise caution, we anticipate a rebound as stability returns and the regulatory framework become clearer. Our focus remains on adopting the challenging dynamics and staying poised for the positive shift anticipated in the near future. On a positive note, consumer attitudes towards sustainability are evolving. A recent Bain & Company report indicates that 64% of the global consumers show a high level of concerns about environmental sustainability, and this concerns is expected to rise. The past 2 years have been a noticeable shift in the consumer sentiment, driven by increased awareness of climate change, often sparked by extreme weather events. Bain's 2023 Consumer Lab ESG survey found that the consumers are willing to pay an average premium of 12% for the products which reduce environmental impact, with those who express the highest level of concerns willing to pay even more. This heightened demand for eco-friendly products further validates the importance of carbon markets and their role in promoting sustainability. At EKI, we embrace the opportunity and are committed to leading the way in global climate action. Our dedication extends beyond reducing carbon emissions. It includes a strong focus on community development and social upliftment. One of our key initiatives in this regard is our exclusive partnership with Indian Oil Corporation Limited, which aims to promote Surya Nutan, an innovative indoor solar cooking system designed to offer clean cooking solutions globally. Similarly, our collaboration with the Joswang Group of Companies Limited, located in Africa, aims to advance sustainability, net zero services, climate investments, and carbon neutrality. This partnership has ambitious goal with a plan to secure $1 billion in carbon credit financing and create more than 1,000 jobs in Ghana and West Africa by year 2030. In FY2024, EKI achieved significant growth, broadening our client base and exploring new opportunities through strategic partnerships. By joining forces with industry leaders, we extend our reach in the global carbon asset management space. Our efforts were recognized internationally with accolades such as Environmental Finance Awards and inclusion in the Fortune's The Next 500 list, reflecting our dedication and excellence. Our subsidiary GHG Reduction Technologies Private Limited has played a pivotal role in manufacturing improved cook stoves with 1.8 million units in India, and on the same space, EKI distributed 3 lakh units of the cook stoves in 3 African nations, including Ghana, Kenya, and Malawi. At the group level, we have invested over INR 104 crores in our cook stove project, which will be increased gradually basis market condition in the near future. Revenue generation from these projects is expected to begin in the second quarter of the current financial year, where substantial carbon credit from such projects are marked by forward fixed price contracts. We also proud of our ongoing projects in Nigeria, Philippines, Tanzania, and other regions, with further expansions planned for Southeast Asia, Uganda, Rwanda, Nigeria, Mozambique, Nepal, Bangladesh, and neighboring countries. Additionally, we recently started operations of our 2 new subsidiaries, EKI Power Trading Private Limited and Galaxy Certifications Services Private Limited, demonstrating our continued commitment to innovation, growth, and diversification. Operational revenue from both the entities will be part of our consolidated financials from quarter 1 financial year 24-25 onwards. As of 31st March 2024, company held over INR 140 crore in the form of fixed assets, bank balances, and mutual funds, where INR 10 crore approximately is free cash flow, and remaining having lien marking from banks and issuance of bank guarantees, working capital facilities, etc. This amount has grown to more than INR 160 crores as of today, reflecting a combination of lean financial management and effective free cash flow generation, owing to satisfaction of performance obligation through delivery of carbon credit from long-term contracts. Revenue has been recognized during Q4 FY24, vis-a-vis reducing the contract liabilities as the projects are now registered and credits issuance has begun. In Q4 last financial year, we recorded a revenue of INR 2.4 crore, corresponding to the proportionate delivery of credits to be delivered in such contracts, and accordingly associated cost of INR 1.1 crores is charged to profit and loss account. We anticipate significant revenue generation from these projects in this financial year. Despite the uncertainty surrounding the international carbon market negotiations, we remain optimistic about the future of the industry and ourselves. Compliance carbon markets continue to grow, with several high-emitting countries laying the groundwork for the implementation of their emission trading systems. We believe that globally integrated, transparent, and well-managed carbon markets will be essential for driving the transition to a low-carbon economy and achieving the net zero targets. With the push towards net zero targets gaining momentum, the importance of well-managed and transparent carbon markets has never been greater. EKI is ready to take the lead in this critical transition, and we are dedicated to fostering innovative solutions that promote sustainable future for everyone. We believe that through strategic partnerships, pioneering projects, and clear focus on environmental stewardship, EKI will play a central role in the global efforts to reduce carbon emissions and combat climate change. Our commitment to sustainability is not only a business imperative, but also a shared responsibility towards future generations. Looking ahead, we see significant opportunities to grow our growth trajectory. We are prepared to meet the increasing demand for high-quality carbon credits in the international voluntary carbon markets, and we are excited to drive change through innovative solutions and our expanding portfolio of services and projects. In closing, I would like to thank our dedicated team, stakeholders, and partners for their unwavering support. It is their passion and commitment that has fueled our success so far. As we move forward, EKI remains steadfast in its mission to lead the way toward a sustainable future. Thank you for joining me today, and I look forward to sharing our continued success with you in future. With our robust liquidity and expanding business, we are poised for even greater achievements ahead. With this, I hand over the call to Mr. Mohit Agrawal to discuss the financial performance. Thank you.
Thank you, Manish. Thank you, everyone, and good morning. Turning to our financial performance, our standalone revenue for financial year 24 is 259 crore, and last quarter for last financial year is 78 crore. The consolidated revenue for financial year 23-24 is 263 crore. Standalone loss is 124 crore for full financial year, while Q4 a reporting loss is 30 crore rupees. Standalone operational cash flow of the company improved to 149 crore after reduction of advances to creditors, GST refunds, and other measures taken by management for better working capital. Consolidated operational cash flow is 165 crore, which has grown up to 195 crores as of today. As our managing director already explained, we have commenced booking revenue from contract liabilities as the projects are now registered and credit issuance has begun. In quarter 4, we have recorded 2.4 crore of revenue, which is cost of 1.1 crore. We anticipate substantial revenue booking from these projects due to the issuance of credit during financial year 24-25 onwards. One of the subsidiary, that is GHG Reduction Technologies Private Limited, the manufacturing arm of the EKI Group, has commenced production and supply of biomass briquette as per the contract. And other subsidiary, which is EKI Power Trading Private Limited, which is engaged in power trading business, has executed a couple of contracts in this financial year from April to till date, which will contribute to the top line and bottom line from quarter 1 25 onwards. The company has taken multiple measures in fact, to strengthen internal financial controls within the organizations, and the company is committed to robust corporate governance. Finally, we would like to emphasize that we are a debt-free company at both standalone and consolidated level, except the minuscule amount of auto loans which is going on right now. Additionally, our liquidity position is robust, providing the company with a competitive advantage for future expansion and diversification, ensuring sustainable business growth. As a part of the management team and leader in the carbon market, we assure all the stakeholders that our industry will overcome current challenges and thrive in the near future. Thanks to all the stakeholders for their support and confidence on us. We are happy to answer the queries or questions of our stakeholders now. I will hand over to Monica ma'am for further.
Thank you, Mr. Manish Daftara, and thank you, Mr. Mohit Agarwal. Anyone who wishes to ask a question may kindly raise their hand or type the questions in the chat box. We also request all the participants to please limit the questions to one question per participant. Thank you. So the first question is from Mr. Aniket Kulkarni. So kindly proceed with your question. Thank you. So you're audible. Please continue.
Yeah. So actually, I'm new to this business. So could you please explain how the company has managed to clock around 100 crores of operating cash flows even after posting reasonable losses on the EBITDA and net profit front? I mean, how does the accounting work? Can you just explain?
Yeah. Manishji, will you explain or I can continue?
Yeah, please do.
Thank you. Thank you, Aniketji. Just to explain you that I have already explained that my advance to creditors, which were earlier, it was somewhere around 70-80 crores, which has gone down to 28 crores, 25 crores odd figure. And GST refund, which we were getting in a 4 to 5 month or more than that in previous financial years, which we have managed to get the refund on a 30 to 45 days now onwards. These type of actions or measures taken by management team on a current management of current asset side, this has give a boost to the operational cash flow, and you can check these figures in a cash flow statement also. No doubt there is a loss that is reflected in our other equity also. Our net worth in 22-23, it was somewhere around 500 crores approximately, which has gone down due to the baking of losses in current financial year.
Okay. Understood. Thank you so much.
Thank you, Mohit. Thank you, Mr. Aniket Kulkarni. The next question is from Mr. Costa Bubna. Sir, kindly put your question. Mr. Costa Bubna.
Hello.
Sir, you're audible.
Yeah, hi. So, just wanted to understand, how does the management look at the business risk and the investments that the company has made going ahead? Because if we continue in the current price environment that we're operating in, the current geopolitical environment that we're operating in, it seems like next year also, in this coming year, it'll be tough to break profitability unless prices increase or something changes. So right now we have a healthy balance sheet, but what is the worst case the management sees? Because we've made investments. So we need, for example, the cook stove project. So we need prices and volumes to be at a certain level to make a return on investment. And if this does not happen, debt could pile up. A lot of things could go wrong. I understand the company is making a taking a bet on the growing carbon markets and ESG compliances, but what is the worst case that the management has taken into account? Please explain.
Yeah, considering the risk for the cook stove projects, like we have investment into two different activities. One is the inventory that we do have, and another one is the cook stove projects which we have in India, Malawi, Ghana, and Kenya. For most of the cook stoves which we have invested, we have done the forward contracts. So whatever the principal amount that we have invested is almost secured, and the additional revenue that we would be able to generate would be the additional thing. That means the good return we would be able to secure out of the same. Further, in case of this cook stoves, we consider that they would be considered under because they are recently commissioned just 1 or 2 years back. Majority of the projects they had been recently commissioned, and so considering the ICVCM core carbon principles, most of the projects we are very much sure that they should qualify under the high quality carbon credit category. So we do not anticipate any risk related to the cook stove projects which we have invested backed by the forward contracts up till whatever the principal amount is there. And considering the other carbon credits which are there on our books, so majorly they are non-cook stove credits, and definitely they are subjected to the ICVCM CCP labels or the declarations that they will do in coming 2 to 4 months timeline that is being declared by them only. And yes, the associated risks are there, but definitely the cook stove projects, all the other consulting and the subsidiaries activities are there, will help us to grow both at the top line and bottom line.
But when will this happen? Because right now I understand you also got this advances benefit and GST benefit, but this won't be there next year, I'm assuming, because so I mean it won't reflect in the OCF next year because it's a change, right, in working capital that makes you get this operating or positive operating cash for this year. So what I'm trying to understand is, when do you think pricing will recover and volumes will recover? By when? Because the company's financials and balance sheet strength depends on this.
Yes. So just to let you know, there are 3 different carbon markets under which we work. One is Article 6 of the Paris Agreement, which is at the nascent stage, and probably the COP29, which is going to happen at Azerbaijan at this year end, will do come up with all the rules and regulations wherein the international compliance market will be there in place. So we do have 2 projects, one at Malawi and one at Ghana. They are already very much aligned with Article 6 of the Paris Agreement. We have got the necessary approvals in reference to the same. And once the market will do start by the end of this year, we would be able to gain maximum out of the same. Second one is the national compliance market within India. So Indian government through Bureau of Energy Efficiency is going to implement national compliance carbon markets called as CCTS, Carbon Credit Trading Scheme. And it is going to get operationalized after this election results. Definitely in these two markets, we do have negligible market share because those markets do not exist. But once they will do come in the picture or they will do get capitalized, we will do take the maximum benefit out of those two markets. The third one is in which we are working for last 10 years is the international voluntary carbon market. And there are two issues which is there in our market, voluntary carbon market. One is the quality of carbon credit issue, and another one is a greenwashing issue. So greenwashing issue means the buyers are buying the credits, but they are not reducing the emissions, and they are not all buyers of these carbon credits are doing the same. But due to media criticism at the Western world, the confidence within the buyers had got shaken up a lot. So to improve this specific situation, VCMI, one international organization, came into the picture, and they came up with the rating of the buyers based on their procurement strategy, and that is there in place. But to comply with this VCMI principles, buyers should buy ICVCM CCP labeled credits. ICVCM means Integrated Council for Voluntary Carbon Market, and CCP means Core Carbon Principle labeled credits. And ICVCM, CCP, they are again working over the quality of carbon concern in our industry. And probably by the end of last month, it was anticipated that they must come up with the clear guidelines. They already have cleared 3 programs, almost 5 programs, which used to issue the carbon credits, which includes verified carbon standard, gold standard. So these 2 standards already had got approval from ICVCM CCP program, and now the projects or the methodologies are going to get approved. So within a month or 2, we do believe that they will do come up with the clear guidelines. And once they will do come up with the clear guidelines, that means what is the exact definition of quality of carbon credit. The buyers will do get their confidence based on ICVCM and CCP principles, and then the market should come up with full trust, transparency, and the confidence. So we anticipate that whenever, probably if tomorrow ICVCM CCP label principles will do get declared, then the market should turn up within a month or 2 time period.
Great. Thank you so much for that detailed response. Best of luck with everything.
Thank you.
Thank you, Mr. Gupta. Thank you, Manish. Are there any other questions? Because there are some in the chat box, and I'll read them for you, Manish and Mohit. Okay. So the rest of the questions are coming on the chat box. So one question is from Mr. Pradeep Rawat. He's thanking us for letting us participate in this discussion call, and also he's wishing us a good afternoon. Thank you, sir. And he's asking us that since he's new to the company, he's asking us that if we can explain why our revenue fell approximately 80% as compared to a 25% decline in credit issuance. And his another question is that why are we pouring into other businesses as compared to focusing on our primary business, which is under pressure? So
So the diversification, coming over the second question, which is related to diversification. So whatever the diversifications we are doing are all related to the carbon markets. For any organization, for any buyer or seller organization, the first step for them is to determine their carbon footprint. And second step is to reduce the emissions with the help of decarbonization pathways or low carbon pathways. So whatever the activities which you are doing in reference to the decarbonization, supporting the organization to decarbonize or to reduce their emissions, that are all the activities definitely help our clients and plus help us to expand ourselves at the upstream or downstream within our core carbon credit business. Coming over reduction in revenues. So as I mentioned earlier, there are 2 concerns which is there in our carbon markets, international voluntary carbon markets, because 2 compliance markets do not exist as of now. So one is quality of carbon credit, another one is greenwashing issue. And once till the time these two issues would not get resolved, the buyers are not buying the credits, and that is why the revenue and top line and bottom line they are getting corrected at the drastic level. So once these two concerns will be there in place, definitely the core business will do perform. And in addition, whatever the diversifications which we are doing definitely are not out of our the core business line. We are expanding ourselves the upstream and the downstream so that our clients we would be able to give them one-stop services to our clients, not only to buy residual emissions from to sell the credits for the residual emissions that they do have. But apart from that, we would also help them to reduce their emissions with the help of sustainability services, with the help of supplying green power or green fuel to decarbonize their businesses. So I hope I have answered the questions which you asked.
Thank you, Manish sir. The next question is from HK. Can you please share the split of inventory purchased in financial year 23 versus inventory purchased in financial year 24?
Yeah, Monica ji, I will answer it. First of all, I wish to say that there is no expiry of the carbon credits. This is their vintage or purchase transaction. Now coming to the specific question, as of now, 70 to 75% of the credits pertains to the purchase done in FY24, and 20 to 30% range they pertains to the FY23. Monica ji, that is the answer.
HK, your question has been answered. Thank you, Mohit ji. The next question is from Vinod N. Can you share your views on recent news on Shell relating to integrity of carbon credit, and whether this has any impact in the global carbon market and any specific impact on EKI?
Yeah, thanks for asking this question. So recent news related to the Shell integrity of the carbon credit. So if you see the global media, or specifically the Western world media, they are criticizing the whole carbon market, the carbon credit issuing agencies like Vera or Gold Standard, that means Verified Carbon Standard specifically. Then this buyer of carbon credits for the greenwashing issue, for the seller of carbon credits for the quality, related to the quality concern. So not only this specific news, but if you do Google, you would be able to find various such news which is floating around in the Western world. Specifically in the in India or the nations wherein the carbon credits used to be created and sold in the international voluntary carbon markets, specifically here the media stakeholders are not very much aware about all these concerns, and I believe there is no any concern related to the same. But the Western world media had raised various such questions that the credits coming from the renewable energy projects are not very much authentic one. The credits which are coming from the forest-based sector are not very much authentic one. The credits which is coming from forest conservation or afforestation, reforestation are not very much of high quality. Or the credits which are coming from the mid-level income countries like India or China or maybe Turkey are not worthwhile. So many such kind of criticizing statements had been floated by those media stakeholders, and we do believe that there is no any concern at all, because 1 ton CO2 is one carbon credit, and one carbon credit which is being generated either from India or from Bangladesh or from Ghana or Kenya used to create the similar impact over the global warming, the positive impact over the global warming or climate change issue or concern, which is the critical, the most critical one for the whole society, or for all the nations to mitigate or to work with. And to mitigate this specific concern, as I mentioned earlier, 2 international agencies had came into the existence. One is ICVCM, another one is VCMI. So once this ICVCM, VCMI and COP29 will come up with their clear stand related to the targets, related to the quality of carbon credits and related to the greenwashing concern, which few of the carbon credit buyers may be doing. So once these three things will be there in place, everything should get cleared in the compliance or voluntary carbon markets, and again the trust transparency will come up with the buyers, and the buyers will buy the credits to achieve their carbon neutrality or net zero goals. So this is the concern which we are able to see for last, not only for the recent news related to this organization, but for last 2 years, starting from February 20, last 1 year, in fact, you can say starting from February 23, wherein Guardian newspaper had, they have done the first news over the international voluntary carbon market, that most of the credits coming from forest conservation from Latin America and from Indonesia, they are not having any worth, and they are being sold in the international voluntary carbon markets. And afterwards, the whole trust within the buyer community came down, and the prices they were coming down for since February 23. So there is a concern, and we are very much sure that since we do not have any regulatory body which regulates VCA's standard or gold standard, but after this ICVCM came into the picture, this carbon credit issuing bodies are now being regulated by ICVCM. Their methodologies to issue the carbon credits, their standards, their working procedures will get definitely controlled by ICVCM, and then all the credits which will come after these ICVCM CCB level declarations, the whole trust should come back within the buyer community, and market should again go up, as being anticipated or as being reported by various international equity research or market research organizations like McKinsey, BCG, Bain and Company, ICVCM. Everyone had anticipated that in between year 2013 to 2030, from 2023 to 2030, in fact, they had anticipated that whatever the carbon market size which was there during year 2021, that is $2 billion, will grow from 10 to $200 billion, and that is only for the international voluntary carbon market. And all this news or all this research information is definitely available online for review. So we are very much optimistic that once this ICVCM and VCMI principles will get declared, the international voluntary carbon market will grow to very much more than the expectations of us. And again, two carbon markets, that means the national compliance market and international compliance market, in next 3 to 6 months timeline, once they will be there in place, the whole market, which is of more than $1 trillion, will get its whole boost. And this specific issue is not only for the credits which are originated from India or from other developing nations. That this is specific concern. The whole international voluntary carbon market is struggling with this specific concern. So yeah, we are very much sure that ICVCM and VCMI existence or the establishment will clear all the bad clouds within the markets.
Thank you, Mr. Manish Gupta. And thank you, Aman. The next question is from Aman Kaushik, and he's asking us when can we expect the top line and bottom line to increase? Okay.
So I have replied in the last question only in the detail while having the detailed response. So again, I will do summarize it. The international voluntary carbon market will do get its evaluation or the triggers after ICVCM, VCMI principles will do come in place. So we are anticipating in next 2 to 4 months timeline. Then national carbon market through Bureau of Energy Efficiency will do come into the existence in next 2 to 4 month timeline after the elections. And international compliance carbon market, that means Article 6.2 or 6.4 international carbon market of the Paris Agreement will do come into the picture after COP29. So again in next 4 to 8 months timeline. So yeah, this with all these elevators, definitely the numbers at the top line and bottom line will increase, and whatever the diversifications that we are doing or the subsidiaries or the companies which we do have since they came into the existence during last financial year, majority of them came into the existence during last financial year or this financial year, and definitely whatever the performances that they will do demonstrate will do add up to our numbers at the top and bottom. So yeah, that is the exact response I do have.
Thank you so much, sir. Next question is from Nitin Gandhi. He's asking, are these CC units likely to trade on energy exchange for transparency, or will it remain OTC? When do you expect energy exchange trading to start?
Yeah, so IEX we do have in India, we do have 3 power exchanges, IEX, PXIL and Hindustan Power. So these exchanges definitely will do get chance to trade the credits once National Compliance Carbon Market, that means CCTS, Carbon Credit Trading Scheme under Bureau of Energy Efficiency, Ministry of Power will do come into the existence. Then they will do start the trading of compliance credits within India through these exchanges. And we are very much sure that they will do allow the OTC trades also under this national compliance carbon market, while international compliance carbon market under Article 6.2, 6.4 of the Paris Agreement and international voluntary carbon market, we do not anticipate that any exchange will do come into the place, because each carbon credit used to have its unique feature. Each projects each project used to have their unique feature, and to bring those unique feature to any specific exchange is a high challenge. And if you see during last 20 years of our carbon market history, such exchanges at the international domain were never there at into the existence. So we do not think for the international trading of the credits, such exchanges will be there in place. While within India, the buyers for the voluntary carbon market hardly they do exist. So since in India we majorly have sellers for the voluntary carbon markets, we do not have any buyers. Marginal buyers are there. So for any exchange to survive, it would be a very, very tough task. So yeah, that is the exact response of us.
Thank you, sir. The next question is from HK. Can you also share the details about intangibles under development?
I'm not very much clear about the intangibles. Yeah.
I will answer it.
Yes.
Answer it. Yeah, please. Intangible under development are the classification of the capex which we have done, means whatever the cook stoves we have distributed in India as well as outside India at a consolidated level, that is being classified under development, and once the project get registered and issuance get started, it converts into an intangible asset. So I will say that investor will find the 2 line items in our balance sheet. One is intangible asset and one is intangible under development. That is the explanation. Yeah.
Thank you, Mohitji.
Thank you.
The next question is from Suryakant Pai. Understanding that the global market will take time to recover, when do you think you can become operationally profitable, with the existing carbon market scenario being staying as is due to uncontrollable situations?
Yeah, so I have answered the same during last 3-4 questions. So I think we can skip this question.
Sure, sir. The next question is again from Suryakant Naik. What steps are you or management is taking to become operationally profitable in near term?
Again, the same question.
Sure, sir. And the next question is from HK again. Can you please share updates about EKI's venture in plastic credits?
Yes. So, we are giving advisory services to many projects located in India and other nations related to the international plastic credits through VCS standard. So that is, and we are giving advisory services means to get the project registrations, verifications, and issuance of credits so that we can sell those plastic credits, international plastic credits, to the buyers majorly located in the developed economies. While the other kind of plastic credit which do exist in India is related to the EPR, extended producer responsibility, wherein whosoever induces plastic into the Indian market, they need to recycle the same with certain percentages given by the Government of India, that means Ministry of Environment, Forest and Climate Change. So we do have plan to work under the circular economy segment, wherein we can recycle the waste like plastic or tire or municipal or other different similar waste, so that circular economy aspects can be assured, along with the getting the assurance to sell the credits in the form of plastic credit or carbon credit or various such credits like green credits. So we do have a plan during this financial year to invest some small amount into the circular economy business, and maybe the plastic waste recycling can be one of the activity. So we'll do come up with more detailed information once we'll do start or we'll do the management will do take the further steps in this specific reference.
Thank you, sir. Are there any other questions that I need to read out in Q&A? If there are, please type so. There is one question from Karan. He has raised his hand. Karan, kindly speak up.
Hello, are you able to hear me?
Yes,
Yes, we can.
Hi, Minister. So I have one question. We recently had some investor meetings, right? So what was its outcome, and why did we have that investor meetings?
That is a regular course of action. Various investment related organizations, they used to connect with us, try to understand our business, and try to that means they used to ask the questions related to the carbon markets, performance of our organization, and opportunities to work together on project to project basis or with some subsidiaries of our organization. So these are the topics which we used to discuss, and once they will to come up with their decision, we will definitely update those specific information through specific right channels to our stakeholders. So yeah, thank you.
One more question, sir.
Yes,
is everything okay as per you? Like going all good? Yes or no? That's it.
Please repeat your question.
Is everything okay as per you? Are we on the right track, path?
Yeah, so because of the concerns which I have mentioned earlier, whatever the best decisions that we can take to go through the turmoil which is happening in the international volatile carbon market, we have taken all the right steps. And we are very much sure once the national or international regulations will be there in place, we do, since we are working or we are into this industry for last more than 15 years, we are very much sure that whatever the resources or the knowledge that we have gained during last 15 years, we will take maximum advantage of the same once all the favorable situations which will come up in the national or international carbon markets. Thank you.
Okay, sir. Thank you.
Thank you, Manish. Thank you, Karan. Okay. Now, I would like to request Manish sir for his closing remarks. Sir, over to you.
Yeah, we may ask if someone do have any further question to ask, and otherwise we will move to close the session.
Sure, sir. Are there any other questions that the participants would like to add in the Q&A section or would like to ask directly? Is there anyone else who would like to ask any questions, please?
All right, we can move ahead then.
Yes, sir. Please do.
Yeah, I sincerely thank each one of you for joining this call. Your participation and commitment are vital to our success and energize our work. Thank you. Mohit?
Thank you so much, sir. Mohit, sir, please share your closing remarks.
Yeah. As we conclude this call, I want to thank everyone for their participation and trust. Let us continue working together to drive growth and create value. Thank you all.
Thank you so much, Manish sir and Mohit sir and all the participants. Thank you all, and you may disconnect the call now.
Thank you, everyone.
Monica ji. Thank you.
Have a nice day.
The recording has been stopped. Thank you for joining. Goodbye.